All right, yo, what's going, y'all? This is your boy Jay Bar bringing y'all another video. And in this week's video, man, I'm just giving y'all a little update on my recent funded account that I got with ETF, Elite Trader Funding. So this week I'm currently up $1,000. So in total, I'm up about $2,000 in profit ever since I first got the account or passed the challenge. So just doing a quick video to like document y'all or to show y'all like some of the trades that I took this week on EU futures. And yeah, just gonna go ahead and get into the video and ask that you guys please do subscribe to the channel, like the video, and also leave a comment down below. Giving me some feedback on the video, or if you guys have any questions about the firm, or just how I've been trading, or risk parameters and everything of the sort. If you just want to make some conversation, just put it in the comments. But so I'm gonna go ahead and get to it, man. And with this process, I do kind of want to just be like as transparent as possible. Um, especially I also showing my losses and everything of the sort, and I'm showing like how every day isn't like a $500, $600 day, right? And as you guys can see right here, I had a couple of in profit trades, but like they kind of like been flagged a bit because of a not flagged in a negative manner, but it's like when working towards a payout, it's like they kind of want you to be having like a minimum of $200 in profit, and not only that, but also too is like depending on the highest days P&L, it has to be kind of like within that percentage of like you can't just keep making like you can't just keep taking small wins here and there. I don't like how the model is set up like that, but I think with most futures prop firms, that's how they are, right? I know I want to say it's either Apex. You see the Apex or top one where like they want you to make a minimum of $200 every trading day, which I think is kind of ridiculous a bit. Especially depending on how you trade. Like I said, me personally, I'm more of a in my videos I stated I'm more of like a swing trader in a sense. Like I'm looking to hold the move going starting an Asian session. I enter in Asia and then I kind of just like capitalize on the momentum, especially like if the trend for the week is already confirmed in what direction we're going to be heading in. So I just look to um, capitalize in the forward momentum of that, right? And if we have any retracements right there like that throughout the day, that's fine with me. I'm cool sitting through that. But basically, from like Asia all the way to like New York session closed, so about like 4:30. That's why I exit my trades if there's like been any movement. If my trade doesn't hit TP before the close for the day, then I just have to like accept what I have at that point, right? Honestly, too, there have been times where I thought to myself, you know what, I'm gonna just go ahead and take the prop that I have right now because it is. I don't want to see like any type of retracement, especially when I check it, and then like psychologically, I'm like, I'm gonna make this money back. So it's kind of one thing that's been going on in with the process of me having this account. Like this $800 win right here that I had yesterday on the 30th of April. So Wednesday, this $800 win that I had right here. This trade was actually the take profit area. It was set to make about I want to say $1,400 on the position, right? But because it was nearing the market close and there was a liquidity area that was already about to be tagged before the market closed, I just went ahead and closed it out. Because I didn't want to be too wrapped up in watching it retrace back again. So I just took my $800 and I was good to go, right? But and then also too on Tuesday I took another entry. This entry right here I held it for as long as I could, but honestly towards the end of the market close I went ahead and closed it out and I only made about $200 on this position, but that's fine with me. Like $200 is $200. Um, However, I do want to keep in mind like I kind of have to have positions that kind of are in line with the highest profit and loss day. I kind of hate that it's like this, but I just gotta deal with it. until I get my first payout on the account. I have to trade the account for at least 15 days. Right now I'm at 6 trading days right now since having the account. Um, so yeah, since this is the week of NFP, I elected after I made the $800 right here. I just told myself like I'm not gonna trade it no more for the rest of the week, especially with it being NFP and the week of NFP tends to be like a pretty confusing week for me, because like it can move one way, but because of the high volatility that's coming in with the non-farm payroll, with that being such a, I want to say, we're just gonna say volatile event. The market can move pretty crazy and kind of can move like in ranges during this week of NFP. So after I made the $800, I just elected to just sit on the sidelines. Thursday and Friday, Thursday being today and Friday being tomorrow, and then I'm just gonna look to capitalize on positions next week. But so yeah, this is my dashboard right here. You guys can see, been trading for about have 6 trading days on the account, but I've had the account for about almost 2 weeks now. And we're currently up $2,115. And I'm really just trying to build a buffer with this account, so when I go to withdraw, I'm not going to be too close to that to the parameters of violating the drawdown. So like currently right now, my drawdown is at 50,000, not 50,000. I want to say it's like 100,000, $100 because that's how they do that. They have like a trailing drawdown for this account right here. This account that I have, I got the 100K. It's not the static. The static one was the drawdown doesn't move. It's the 100K fast track. It's the fast track account, right? So that kind of has a trailing drawdown, but once you're in profit, the trailing drawdown moves up to the balance and then plus $100 of the initial balance. So right now my drawdown is as long as like the account doesn't dip below $100,100, I'm good to go, right? But with that being said, I'm just gonna go over to my journal and show y'all the couple trades that I did take this week. So go ahead and do that. So right here, this is my journal. I use Notion. Also too, I'll leave you guys like a link in the description if you guys do want to check out the firm. If you want a discount, I'll leave a discount link in my YouTube description. So if you guys want to check that out, feel free. They actually do have a couple discounts going on right now. Actually, I don't want to click off of this right now because it's gonna show like my credentials and everything. It's like my login and password for my account, so I'm not gonna click off of it right now. But yeah. So I'm gonna go here to my trading journal. I don't know why I put ES short. It needs to be EU. It should have been Euro. It's gonna be Euro short. All right. So this was a short on Euro USD. Right, the futures contract. So the 6E futures chart. I journaled my emotions. I was confident at first entering the second position. However, I did get a little anxious towards the end, which is what I just explained earlier. So I went ahead and closed the trade out for to go ahead and take my $800 and just dip out basically. So and then that second entry, very first entry on Tuesday, from Tuesday's Asia to Tuesday's New York. I kind of like held that position throughout the day, and there was a point in time where like the position went, the most it went into profit, I think was about $400, and then it just retraced that range for most of the day. So kind of going forward, what I might do is I might look at just if I see like a rally during like the New York morning session, so like from like 8 to 10, if I see like some sort of rally within that time segment, I might just elect to, instead of just going to take profit, unless it's like already near what I think is the draw on liquidity, or the area of interest, the point of interest. Unless it's close to TP, I might just let it do its thing. But if it's like nowhere near the take profit area. Well, what I'm gonna elect to do is just go ahead and take the profit right there, and then just let that be what it is. So, so yeah, I'm just not trying to push this account too much because I do want to get that first payout, and I have to trade for at least 15 trading days. I have 15 trading days logged in, um, so I don't want to push the account too hard while at the same time, building up enough of a buffer to like take a payout and not have to worry about being too close to the drawdown. So, um, yeah, that being said, I'm gonna go ahead and get into the trade. So as you guys can see, I journaled it right here. This week I took a few entries on the 6E, which is also the euro for futures. Entries were based off of a weekly S&T divergence between EU and GU. I was interested in executing trades this week because of the rally above Sunday's open price during a weekly external range to internal range move. And when I click this right here, you guys can see this candle right here, So from this high to this low, this is on a 4-hour chart. This is what I execute off if I see like a weekly pattern forming. But in this case right here, this was that weekly high from last week of Monday, April 21st. And this is the weekly high of Monday, April 28th, which is the current week that we're in. So from this high to this low, we had an S&P divergence with GU, right? So you guys can see right here, Monday, April 21st, at 2 o'clock in the morning, right here. And then over here, we have the high for Monday, April 21st at around 11 o'clock, right? So this is the highest high of the week for GU. And this is the current high going into this week. So we had the S&T divergence between the highest high from the euro and the highest high from the British pound, right? So higher high, lower low, or lower high, yeah, higher high, lower high, and then we have a high, then we have a higher high, right? So that's the S&T divergence right there. And then as you guys can see, they both moved in correlation after the divergence right here. So my first entry, you guys, I don't know how well y'all can see these right here, but my first entry was right here where you see like kind of like this really gray shaded area right here. My first entry was like right here at this candle going into Tuesday. And then going into Tuesday, there was like a little rally right here. And then this is that retracement that I was telling y'all about earlier. This was that retracement right here. And this is where I closed for like about $200 in profit because the actual entry was like right up in here. I don't know how well you guys can see that, but it's right up in here. Right, so that first entry on Tuesday, Asia session was right in here, right? Because we have formed the S&T while also inside of a fair value gap. A little bit of a volume imbalance right here too, but that was already filled. However, its price still respected it by closing inside of it and not above it. And there was also a smaller like inversion fair value gap right here on the smaller time frames, right? So I closed that position for about $200 in profit towards the end of the day. And then going into like basically Wednesday's Asian session, I entered another entry like right here, right? And then for most of the day, from that night going into that morning of Wednesday's New York session, it was we kind of like consolidated for a bit. My position never really went into drawdown per se. It maybe it did for a little bit, but after this right here, after the entry, it was just like consolidating the rest of the day. It had like some upward, some downward movement in profit, So, but either way, I was looking at this liquidity area right here, and I was thinking to myself, if there's any area of interest that where it's going to tag first, it's probably going to be these lows right here. And lo and behold, later on towards the end of the day, that's where this rally started to happen, especially because we had news events coming out too at 10, and I forgot what news event it was, but there was like a red folder news event for the U.S. dollar. I think it was something on monetary policy, but it actually that was the catalyst to like get this push lower towards the end of the day before market closed. And right in here is where I actually closed the position, right? Because this candle right here, this is the candle after the market opened back up. I closed it during this candle right here. and it just hit shy of that. I closed it just shy of this because I wasn't actually sure if it was going to be able to go ahead and hit it before market closed. And as you guys can see, how the candle closed, if I would have left it open, it wouldn't have tagged the area. So I just went ahead and closed it for $700 in profit, right? But so yeah, there's that one. And then the next one right here. But yeah, it's just a description of everything I said. First entry was taken Monday night during the Asian session, so going into Tuesday's Asian session, held the position but closed it for a profit of $200. The next entry came that night of Tuesday's Asian session, which is also the start of Wednesday's trading day. But yeah, it was a entry inside of a 4-hour inverted fair value gap, and it was also near Sunday's open price. Right, that's right. I forgot to mention Sunday's open price. So right here is that Sunday's opening price. So at the Sunday's opening price right here, inside of it, I want to say it's like in this area right here, we had that rally above, back inside of the inversion fair value gap, or back inside of the fair value gap that's right here again. So we had that rally right here, and this is that inversion fair value gap. It closed inside of here. It respected the area right here. But inside this fair value gap above Sunday's opening price, we had that rally. With that rally, we formed the SMT between EU and GU, right, or the euro and the pound. So we formed that SMT, and that was the confirmation that I received that okay, we're going to see lower prices. There's like a daily internal range inside of here, because right here currently this is the highest high for the euro, or that on as far as like a daily perspective goes. This is that external range. This is that liquidity pool. This liquidity pool has been rated. So I was already anticipating lower prices. There's another like internal range liquidity pool resting below this one, and this is ultimately where I think we're gonna head next, going into next week. But yeah. So that Sunday open price one is the T, and that gave me confirmation to look for short entries, right? So that's what this entry model was based off of right here. Then this position right here, this is the one that I closed for $800. So I entered right here, and boom, I made it a different color because I was like, okay, I'm gonna journal this, and I know I'm gonna talk, make a YouTube video about it. So that entry was right here at this candle, that high right there. And like I said earlier, like my position never really went back up. My short position never really went back up into drawdown. It kind of like just consolidated for most of the day until like those news events came out, and the news was actually negative. The news was actually positive for the U.S. dollar. So the dollar was going up. Meanwhile, the euro was basically just selling off during that time, with having its consolidations and retracements, and then continuing in their respective directions. Right. So that also kind of gave me the confidence to stay in the trade and hold it for the most of the day. But yeah, we up 800. We currently up $2,000 on our funded account. And so yeah, like I said, I'm not gonna be trying to push the account too hard. Because one, I don't want to lose it, right? I worked pretty hard to earn it, right? So I don't want to lose the account. But also at the same time, I do want to be sure I build myself like enough of a buffer to take some decent payouts from the account, right? So I do plan on just like lowering my risk a bit more. Currently right now I'm risking 0.5% of the account. So 0.5% of 100,000 is $500. That's currently what I'm aiming to risk. But with futures, even with the micros, it's kind of hard depending on like how you trade. Like I said, I'm usually using 1 hour and 4-hour charts for my entries, because I still work and everything, and like kind of swing trading and intraday trading, like holding positions for a couple hours or so, because I can't really look at the charts like that unless I'm off, right? So for me, that's how I trade. That's what works for me right now. So it's kind of hard to get those positions to where I can only risk about $200 or so in risk, mainly because futures and forex isn't calculated the same way. So yeah, especially with the contract values and everything, like contracts being worth like $6 per point, or well, per tick move and everything of the sort. So with that being said, y'all y'all stayed this long to watch the video, I really do appreciate it. I'm trying to be a better content creator. And just start making this YouTube money, man, along with my trading, you know, funnel that over into that. And, you know, if this helps anybody, you know, I'm really grateful for that. Like I said, feel free to have a conversation with me in the comments. You can ask me a question or just give me a feedback on anything. You know, I'm here for conversation. So with that being said, subscribe to the channel, like the video, comment down below, and I'll see y'all in the next video, man. Peace out.